Sincerely speaking, market can be funny at times. Market can be so funny that what you think is the right thing to do will come back to you with a lot of surprises that if care is not taken, you would think that this market is being manipulated. Let's just take this thing as an example. This is 1 hour time frame. And I'll be showing you one thing that can help you to avoid such a silly mistake. When a market like this takes this move in this direction, it confirms that this market is about to take a journey. And now here comes another crossing, which by all indication that this market is making a move. And finally here is the last support zone that this market has finally crossed. And this is just 1 hour time frame. And now that you have this, the market opened up in this direction, giving you a strong entry point, that's which I know that many will trade this and make profit. Trading this and making profit is not where the issue is. But the issue is, how do you know that this market is coming to an end? How do you know that this will be the end of the journey for this very candle? Because many that entered here will later lose their trade if they have seen this and relax and thinking that the whole journey have opened for them to move on. Now, why would this thing happen, and for what reason should this market come back to this direction? It's as simple as anything if you have the foundation of the market at the top of your finger. Now let's see why this market will have reversed and later take a shot from this place, which later ended up from this place to that place. Why is that going to happen? Now, some of the students in my class will know that whenever we start a journey with me newly, I will always give you an assignment that will crack your brain, that will make you to think deep, that will make sometimes many that entered the class, they didn't do the assignment, and that was the end of the class with me. I know what I'm saying, because I cannot give you an assignment. I cannot show you what I know that has helped you. You want to be like me. You want to be like some of the people you watch online. You want to be like some people, some success you are seeing. You want to be like them. You think it's just you just sleep and wake up and the whole thing will happen all of a sudden. No. Some of the things we are showing you are the things that made us, to trade, that can make us to look at $2, and instead of allowing the $2 to go, we'll try to raise the $2. Some of the reason is those things. Now, in such a state, what we will do to help ourselves is, since this is 1 hour time frame, please zoom out. If you zoom out, it will help you to see the structures of the market. And when you see that, it helps you to see the previous ones. So every of your last support zone should be respected, which is the price, where the price stopped in the previous move of the market, should be respected. That is number one rule. Your previous market should be respected. When you zoom like this, you may not see it, but this is where the market started. This is where the market pushed and get to this point. And here, the next move take off from here. Check this thing from this angle to this place. You discover that the lines are not too much. So when you take a direction, when you enter a trade without being careful of what will be the outcome or what may be the outcome of the market, it will frustrate you. So who will have believed that just this little thing can make this whole move of a market to stop? Just this in your 1 hour time frame. And And when the hour time, like what we had in our private class last week, um, I told them that they should be very, very careful whenever I come to any 58, which is a minute or 2 minutes to any new candle in 1 hour time frame, because candle will always like to show up something. So at this point, some people that have closed earlier would like to go back again, thinking that it will come back and break out from this point. That is why I keep begging people to have this level of discipline that makes them to see what they think is right. But since they are not too sure, they leave it, because if you make a mistake of thinking that this should be the right thing and the market goes against you, the problem is not that you are losing the money, but the problem is that you may not have the heart to lose the whole money, because you would think that since it's now $10, before it gets to $15, it can reverse and give me $20, which means after regaining my loss of $10, I will still end up with $7, making it 17. No, sometimes you will discover that when the thing started affecting your capital, that is when you will close with huge loss, that even your heart will be reminding you that you have made a terrible mistake that you live to regret. So that is why you should be very, very careful. So instead of that, I am giving you this open strategy that's going to help you mostly if you want to trade on boom and crash, 300, boom and crash 300, boom and crash 500, boom and crash 1000. Is going to be of a great help and of great assistance to you, because it looks so simple, but it carries something inside. And that is why I'm going to be dropping another thing that will help you to fish out some level of mistake people are making. So let's quickly add up one small thing that is going to be of a great help to you. Let's add it up. Just use this thing as a default like this. Just touch here. In case you have so many of them, just touch this arrow below here. Just touch it. Just touch that place. You see the default, set to default. Just touch it. It will bring everything to normal. So once you have that, it brings you up to this place. So see, look at why you should be very, very careful. Now look at this. When you have something like this market I'm using as a case study crossed over to this place, but check around this place. The histogram did not make any move like this. But once this thing make a move like this, watch what happened at this place. There was a confirmation. So that is why it's good for you to have your MACD, especially if you have a small account. And I must be sincere to you, a lot of mistake that people are making is caused by this MACD and their moving averages. Listen, why did I say this? Some of you will see a signal here, but you did not confirm your moving average, both your second moving average, your window 1 or window 2, depending on how many windows you operate with. But you only confirmed your MACD, but you did not confirm from any other places you enter trade. Don't you know that these things can sometimes disappoint you? Don't you know that market itself is a probability? So when you have this type of market, let's just use what is happening currently now in the market. When you check what is happening in the market, this market is purely making a move on a bullish move, which means it is a spike direction. But how then do I trade this when I am seeing something like this? So if you watch something like this, it gives you an encouragement and a footstep for you to take and make a huge profit. Now, if you go down a little bit to your day trend, you will discover that something fishy is happening here. So at this point, that is why even in my class, I spent a lot of time to help people know that no matter how you think you are knowledgeable, or the stuff you carry or online or whatever, that there is a need for you to follow the market squarely. There is a need for you should not ignore any single move, mostly when it comes to higher time frame. You can see positive entry points on your lower time frame, but if you don't take advantage of it in a nutshell or in a short while and leave, the change in the higher time frame can frustrate your progress in your lower time frame, which is very, very crucial and important. So how should I use this thing to place a trade, and how profitable can this help me to be? Number one, you have something like this, you have something like this, you have something like this. As simple as this, you will take a journey. When I mean a journey, you take just one simple step ahead. You just take it and you close your trade. Then, how many times can I do this in a day and be successful? As long as you see the opportunities, you will trade and be successful. Now, a question can be, how do we see this? Because you show us from what has happened in the past. How do we see this? Number one way to see this is for you to zoom out from the market. Take this step. When you zoom out from the market like this, it will interest you to know that this market you are seeing here, when I zoom it up now, it's going to come to this point, showing you that the market will spike like this. But when you are a kind of person that have studied the market very well, I mean that have been able to learn from somebody, someone that has spent time to tell you some secrets of this market, you will understand that you still have possibilities in this place. When I mean possibility, you still know that you still have opportunity to catch a spike in this market. Why? Because I don't want to say you have huge opportunities here also, because when you check from your higher time frame, you will see that this market have not made a conclusion. This one is still on the move to change a direction, and this is just a fresh 15 minutes. You see it has started dropping. Have you seen it? Let me show you. Have you seen it? That the market spiked. Look at it. Have you seen it? The market spiked. So when you have something like this, even in your little capacity, you have to take advantage. Like some of you that have like $5, $20, you want to grow it and you want to do it, and you are tracing your market from where you don't know. These things are simple things you can do. Apply your mind. In short, let me say it openly. If you have like $10 or $15 and you want to be successful, please, there are two markets you should avoid. I'll keep saying these things. Avoid this 300 moving average. This 300 boom and crash. Do you know why? Do you know why you should avoid it? Because they are so volatile. It happens like a magic. It goes up in a minute and come back in a second. So if you are not lucky enough, let me use the word lucky, which does not exist in the FOREX at all. So if you are not lucky enough to place a trade when the market can pull back, let's assume you have like $3 and you use your 0 point something to take for a spike, and unfortunately for you, just like what happened here, believing that another spike will come and the thing will take you here before dropping. Do you know what that means? It becomes a very huge challenge to you. Then you place a trade because it has crossed here, believing that this thing is going to come up like this, only for you to see a spike from this direction that will that is going to bring tears in your eyes, and your account may be wiped out, depending on how many positions and the strength of your market. I hope somebody is getting what I'm saying. So these things you are seeing is as simple as that. So when you want to grow your account, please, I urge you to at least wait for a good entry point. Such a good entry point is this. What strategies can I apply to get this good entry point? Number one strategy you should have is your moving average. Apply your moving average on your main chart. Is very, very important. It's very, very important. I'm giving these things out for every one of you. Remember that GDFX have never in my entire life, nobody will say I've ever sell strategy to him. I don't sell strategy. And that is when people will come to me privately and say, please, what strategy are you? I say, go to the YouTube. Every strategy I apply there is tested and trusted. I don't sell them. And kudos to some of you who have been able to make money from it. Kudos to all of you. Kudos to some of you that are so kind enough to come back to my channel or to my WhatsApp, and send me some of the messages and say, this is the outcome of your videos today. I am so grateful, because when I see that, it shows that at least when we put our efforts to show to the world, to help them, at least it makes me to feel happy that my dreams are gradually coming true, because I can now drop something that can help some people. At least one of them that said to me one certain time, this guy has been trading for some years. He has been applying so many strategies and it's working for them. Some of them is working for them. But he said that changes occur. He's now increasing, developing. So when he made some losses, he will now recognize and realize of the truth that there is a need for mentorship. He will now come to me. And my greatest joy and happiness is that few days after mentorship, he now realized that there are things we watch on YouTube here that nobody will tell you except you come closer. And that closer is that price you have paid for mentorship. So this guy now started making money. I told him that I will share his success online. He said that for now, because of the evil that men do, that I should hold it until he reached to a certain amount he wants. So that is one thing to do. In my next video, I'll be bringing up some of my students. We'll be having a class, and some of the things we'll do there, I'll bring at least one of them. I will show you what we do in the mentorship, at least private class, before we come to general distance. So these things are very simple. So the best thing you should add is moving average. And here right now, the moving average I have here, number one, is the moving average we have here is moving average 9. And somebody may ask me, you said we should use moving average 10. Why then do you use 9? Listen, each of them have their own way, their role they play. If you are good in candlestick, if you know what the role candlestick can play, you will know one simple truth, that each of the day are covered with moving average. Yes. The average of the market, the move of the market, that is the moving average. So when you want to check the move of the market in the 15 minutes time, in 15 days time, you place 15. You get that? When you want to check the period of moving, how the market is moving in 20 days, you add the 20. When you want to add the moving, then the another thing is, how do you want that line to move? Do you want the market to be moving exponentially? If you say, okay, you don't want this to be moving exponentially, you want it to be moving smoothly, that is why you have this thing. When you said, no, I want it to be linear weighted, that is why you have this. You said, I want it to be simple. That is why we have these things. So for me, having make researches, having studied and spent time to make researches, I come up and realize one thing, that exponential is one of the best that helps you to see the current move of the market without much delay. And that is why you see most successful traders, especially on boom and crash, are dealing with exponential. That is where you see 21 EMA, 10 EMA, and all the rest of them. But when it comes to volatility, currency, and all the rest of them, one of the best and most powerful one to use is simple, because there is no need for you to rush in that one. When you are sure, when you relax and trade, at the end of the day, you will see it in a simple way. You place your trade. Then when you want to apply, what are you applying? Do you want the market to the moving average to be open? Do you want the moving average to be low? Do you want the moving average to be medium price, HL? high low, do you want it to be a high low again? So all the rest of them, that is how the market move. So, but instead of opening something that will confuse you, you better close it so that you will have a concentrated market. Now, the second one I'm using is 12. Why do I want to use 12? Because I have a small account that I want to raise. I have a small account I want to use to build. I will show you this account in my next video. You will see it. Remember, this is 33. I will show you this account. If possible, I will show you from the history how I have grown this account. This is what we do. So instead of when I have 33, I can possibly add higher distance, but I want to see the market from the low perspective so that it will help me to be taking advantage of this little crossing. And when I have done that to reach the account to 100 or 200, I can now move over to 50, 200 and 200 moving averages, when I can now see the wider range of the market from a bigger perspective. That is what we do. So these are the things that we are using. So this time I'm using 12. Remember, once you see exponential, is A, so it's 9, 12 EMA. Apply to close. Use any color of your choice. That is your business. Then this time around, I now use 12 as my moving average. Remember that this is indicator window 1 in case you didn't see when I press it. Indicator window 1, I apply 12. Then this time I have to apply 50. If you know what I did here now, what I did was that I use this moving average, this indicator window 1, to cover a long period of time to see what the market looks like in the future days. So that gives me the strength and the courage to see that whenever the market cross here and this thing will cross here, it shows me that for my window 1, that at least the 50 moving average is still under what I am doing. What do I mean? That the crossing in my lower time frame is not a mistake. That even in the 50 days of time, that there is a move. That 50 period days and the 12 period days, that they are making the same direction. I mean that they're making the same move. So at that point, I can now say that my entry point is correct. And secondly, is that it helps me, listen to this, it helps me to see the full structure of the market to confirm that actually this is what I am doing, that I'm not making any mistake at all. Do you get that now? That is how we roll. So the last one, the last but not least, is this default MACD. So if you are looking for a way, opportunity to raise any capital, do this. When I say do this, I say do this. Then for you to be also on a safer side, you can also add, you can touch that MACD and also add up something that can be of a great assistance to you. At this time, you add something like 5 to use it to regulate the MACD from the lower perspective. Do you see that? So when that happens, it means that once you see that the MACD signal line have crossed over to the 5 period days of moving average, it shows you that this thing will be going for a period of time. Though this one, I will be making a video on it for you to see how clear and the exact moving average zoom level you will use and the accurate time frame that you can apply to get this thing correct. But it's a very powerful signal, but I just want to show it to you here so that you will see how perfect it can be, and you will see that anywhere this thing made a cross, no matter the challenges you are seeing, the market is showing, the market is indicating scalping movements depending on what you are using. Look at it. So of all the drama that will happen, once you confirm it, it's a straight move. All right, so let me stop here so far because of our time. Let me stop here, and I want to beg every one of you who have not subscribed to my channel to please do so. Your subscription gives us encouragement. The more we see people subscribing to this thing, the more you are challenging us to go further. So please, if you have not done that, it will not cost you any extra payment. It's just touch it. It will not affect you. All right. The benefit is that it helps you to see some of the things we are dropping. It makes you to know when something new is here. And for some of you who have subscribed to our channel, thousands of you, please, I want to say thank you so much, because what you have been doing is to build a strong community that you will never regret. That's one thing I do. Remember that I'm not competing with anybody. What I'm doing is a selfless service, that my heart's desire is to make sure that somebody somewhere, no matter your country, no matter your geographical location, that you will succeed. I am not charging you for this. I am not charging. The only people I'm charging are those that said, all right, after watching all the videos on YouTube, I want you to be my mentor. That is the only people I will tell the price. That is the only people. So nobody will say, I don't do investment program, I don't do management, I don't do account management. No, I don't do that. So the only people that I have business with are those, some of you that have subscribed to this place, and some of you that always come back to watch our videos. When they chat me, they said, we'll watch your video back to back. Sometimes you will see comments on my YouTube channel here. You will hear some people said, I'm the first. When I see those things, I just feel like, so people are waiting to this extent. So it makes me to come back and see how I can be of great help to them. Don't compare GDFX with any other person. I am not that person. I can never be that person. I am not fighting to become them, and I'm not hoping that I will be like them. I will be myself, and I will move on in the direction. One thing is sure: if you follow a man humbly and sincerely, you will get the fruits of that man. My name is GDFS. I love you. Please keep cashing out. Please keep cashing out. Lastly, remember this: forex trading and forex traders are not noisemakers. Please get that straight. It's not a flamboyant platform that you can be flashing your money. It's good when you are to that. Forex traders are not entertainers. Forex traders are money making venture. So entertainers can flash their wealth, they can flash because they need attention. They need people to recognize them and call them for who they are. But forex trader, you can be right in your room, in your resting room, right in your, right in your car, and you are cashing out and nobody will notice you. And you can be safe. The only difference is that when you are when you are buying things and coming off, some will say that you are a lazy man. They don't know that you are making huge progress. My name is GDFX. I respect you for that. Thank you and goodbye.